what I find when I'm trying to help people start their businesses is that there's a real fear element that may not be there in your hearts, because I'm looking at a room of fairly young people. But as you get older, you become more and more risk averse, or maybe just more knowledgeable of what you could be afraid of. I've met people that started businesses when they were 14 and were extremely successful. And then when I met them again, graduated from college, they did something new. They suddenly learned what they didn't know, I think. So just that's kind of a theme around this. And when we talk about gender differences, women tend to be more careful. Just sorry, guys, you're a little bit more risk-taking than we are. And so in general, that also sets us back. All right, you need me to start over? It's a good thing to repeat. Okay. I've got 3 of my major businesses listed here, but there are 11 that are running out of our little incubator in North Carolina, and they range from techie to zero tech, and anything in between. There's no commonality in what I do. It's really a matter of what does the individual's passions are in the area that they want to do this. Whether there's enough money to be made. Can we see the big gap between how it costs, how much it costs to get to market and how much the market would pay? And then do we have a path to get there? So that's, right, I'm gonna hit the next slide. All right, so how many of you are interested in working in or are working in a startup? That's why you're all here. Everybody? Well, all but one, good, okay, that's good to know. So that's what we're speaking about. And you might all be too young to remember this movie, but it's, if you build it, they will come, right? So how many of you think that that is an operable plan for your startup? If you build it, they will come. I'm looking for that, right? So it has happened, and people will cite these things like the Apple phone, right? But they are extremely rare, and they cost a lot of money to get to the market. It didn't come out there cheaply. So the part of this that's really important is to really understand where you're going to get your market from if you bring something to market. There's a whole bunch of buzzwords out there, and sometimes they're interchanged and sometimes they're confused with other things. So there's invention and innovation and entrepreneurism and startups and incubators. And because they're sometimes confused with each other, I just want to make sure that you understand where I'm coming from. So invention in my world means there is something that has been created that did not exist before and has the ability to be patented, even if it chose not to be. That is, it's unique and differentiated from the other things that have been patented, and you can own it, so nobody else has practiced it. That's an invention, and that's different than an innovation. You can be innovative without inventing anything. You can be innovative in a whole lot of ways that aren't even patentable. And innovation can still get you a lot of business, but innovation is not invention. Entrepreneurism means that I'm willing to try some stuff that other people might not ever do in order to see if I can get something launched as a business. You can do that inside of a business, which is where I spent 30 years. And I was really fortunate for the first 20 years of my life to be inside a corporation that loved doing R&D, didn't really know how to do marketing, so I got to figure that out too. And then start up businesses inside of an organization that paid for my travel and paid my salary. Woohoo, right? But entrepreneurs today are taking a bigger risk, or they're asking other people to fund that for them, which I'm sure you've been aware of the pitch competitions, right? Startups are different than incubators. And incubators can have things that are layered on top of it. So there are some incubators where the funders for the incubator take a piece of your business, and that is useful or not, depending on it is. So again, when you're thinking about how you're going to share your business and your idea, think closely about whether you're going to be doing it yourself and then looking for venture or angel funding, or if you want to talk about being in an incubator. Okay, so what really matters? First, there's these invention things. So how many of you are working with something that's an invention? Ready? Awesome. Okay. How many of you have an innovation? All right. Okay. So you're already done, right? You got innovation? You're good to go? No. Okay. Because at the end of the day, this is all that really matters, right? Unless you're in a nonprofit, we can talk about that too. But where did that go? I'm seeing it on mine. There it is, profit and cash flow. So this is what matters, right? Profit and cash flow. If you can make a profit and make sure you can make all the bills paid on time, that cash flow piece, then you've got something that's successful. And the fact that you have a patent or an innovation and you have technology that can do it, you can even demonstrate the product, not how you get there, right? There's a big piece, there's a big gap between all of that understanding and then the magic happens and you end up with something that's profitable, that is purchasable, that is revenue generating. So we start with an idea and we start with prototyping, testing, and market research. So how many of you have a startup that's in this state? Yep, okay, so prototype, test. This prototype, test, go back and figure it out. How many times have you been through the cycle? Several. Not that many yet. They're coming. It rarely happens that it's once, but you can, right? So part of this is if you think mostly about this process, not previously the invention or the innovation, but this process and optimize for this time, you can minimize your time spent here. And I'm going to reflect just for you because you've done it many times. You probably learned a lot in the first couple of iterations that you're maybe like, oh, if I'd only done that, yeah, right? And a lot of that is, again, about market learning too, right? So what is this market that I'm creating the solution for actually want? What are they willing to spend for it, right? And the more you think about that, the less time you'll spend prototyping if you can turn it, right? Okay, so then you get to something that looks like a final prototype. And then once you get to the final prototype, I'm not trying to make this sound bad, but that's like when the real work actually starts, right? So now we need some money because that real prototype has to go to production if it's a physical object, or you have to make it available if it's a digital object. And now you have to do another round of it, right? So if you're a digital project, it's a piece of software, you might release it before it's perfect, and then you're going to do this. But it could be that you release a physical project, and then the physical product has issues once you have enough people testing it. Lots and lots of examples of this. The automotive industry went through this in the 80s and 90s before any of you were born, and they've gotten better at it. But there are plenty of others that are now in the electronics industry that are living in the same space, where they release it, and then they realize, oh, look, that phone doesn't fold. We'll just take it back off the market. Right? Then you can start to make money. Biggest challenge. Okay, I'm sure that everybody has challenges with money because you need to be able to feed yourself, live in somewhere, and also buy the things you need. There's also time, right? So they're kind of tied to each other because the longer it takes, the more money you just have to spend on yourself to exist before you can make money. But I'm going to make this case that maybe the biggest issue that you should think about is the people, right? And who do you have? All three of these are important, and if you're missing any one of them, well, you're probably sunk. So think hard about what you have and make sure you have these things available because it's going to take time and you're going to need the right people. So this is my list of what I think about when I hear someone's idea and I think, what do these people need, right? So this might be a scary list. Do not let this get into your fear space, right? But just be aware of that, well, of course, we need idea generators. And I'm going to bet that most of you are in the role of idea generator for your businesses, right? And prototyping. We need people that can make some things and test them. And maybe you also serve that for your role. Market research. Is anybody here in the function of market research in their organization? Or by default doing it because it has to be done? Maybe, right? Okay, yep, good. Testing, which can involve a variety of commons here. It might be the testing in the market, it might be testing of the product. Customer interactions. Who's got the customer interactions in here? Okay. And does that mean because you're actually selling things? That would be exciting. Awesome. All right. So somebody has to do customer service and then complaints and returns and collections and all that good stuff, right? Investor interactions. So usually those of you that are the founders are also doing the investor pitches and talking to the investors. And I expect that many of you are doing that. So let me just say that we've talked about, you're probably this and you're probably this. And You're probably this, right? And some of you are also this, right? We're going to keep adding up these job descriptions. Then there's making it, right? So whatever that looks like for your product and manufacturing it and producing it so it's available for the market. Sourcing things that go with it. So buying things that are not humans and purchasing and making sure those get paid for with the funds that you don't have, right? And then marketing your own product. And then having enough financial acumen to know whether you still have cash flow at the end of every week or at the end of every month. I'm starting to see depression. And then legal, because, there's this other stuff that goes along with that, depending on what market you're in and what you're selling, that you might have risks as you go to market. You might make sure that you have insurance coverage for those things. I once started a business with a young woman in furniture, and I learned how expensive it was to have insurance on a business that sold furniture. It was expensive, right? You'd think, why should that be? Well, okay, people. The biggest expense was if we made rugs. We could make chairs, and that was not too bad. But if you made a rug to go to market, incredibly expensive to insure that business. It's because of our litigious society, right? So these are all the things you're going to need. Maybe not at day one, but you're going to need them at the point in time where you're really turning some volume or you're actually got more than one customer. Right? But our average startup has about 3 people in it. So if you're feeling like you're multitasking, then that's accurate. And if you're missing some of these, then it's helpful to have people on your 3-people team that have more than one of these attributes. Often that's not the case, right? People are very one-dimensional in their capability, or they're very deep in an area and not broad. But it helps to have people that can kind of cross areas, especially if you're not covered in all of these. All right, so how many of you are a jack of all trades? Like doing all of these things? 2, 3, that's good, you admit it, right? And how many of you are team building? That is, I'm gonna go find the people that I need. You're gonna raise your hand because you just asked for that. I need a developer, right? Those are not mutually exclusive. You could be both of those things, but generally it's a lot easier to do a startup that you're not sure how successful will be by being a jack of all trades first, because it costs money to bring those other people in, right? So how many people are in your organization? You say you were looking for a developer. How many people are in your organization today? 3. And then you're going to bring in a 4th, right? And the ownership of your organization is spread amongst those 3 people, and maybe that 4th, and maybe anybody that invested with you, right? So every time you bring another person in, there's this discussion of what are we giving them to be part of this, right? And if I go to that list of attributes, if they're delivering on one of them, all I'm going to say in terms of the argument about how much they get is, well, look, there's a whole lot of stuff to do, and if you only do this one piece, that's what that's worth. I might just find somebody else to do that one piece. But if you do 3 pieces, wow, now you're a really, really important member of my team. You had a question? Or you're just commenting on the... You're also doing both. How many people are on your team now? 4, right? And how long have you been in existence? 3.5 years. And when you started, did you have the same 4? Yeah. How many people are with you now that were with you at the beginning? 0. Even you? Just you. Okay, but you've turned over or added from that point. Yeah, 3.5 years. Do you feel good about your 3.5 years? Oh, yeah. You learned a lot, right? Which is, when Silicon Valley funds something, they like to see people that have failed a few times because they figure you've learned a lot. You can also learn from others. You don't have to make all the errors yourself. Feel free to learn from others, right? Share those experiences, which is kind of where I'm at. And make sure that every minute that you have, because every minute's $1 spent, and time spent for a person that you might not be able to get, it's important. Right? Thanks for sharing that. I know that's hard, but that's good. Thank you. All right. So this is my theory on people, right? Kind of the basis of what I think about, right? So this used graphic when you're managing others, right? So if I'm the manager of a group of individuals at as a company that has existed for decades, right? And I'm looking for how do I reward or motivate or hire somebody else? I'm going to look at this kind of chart, right? So if I go to hire someone, I want someone who has the capability to do the job that I want them to do, right? So I write a job description and I measure what they have or interview them against the capability. And then I also want them to be motivated, right? So as an example, I could have somebody that has a PhD and knows everything about a topic area, but if it doesn't look like they can get up in the morning or show up for work, the motivation's low. So that's not very helpful. On the flip side, like, I could want to be an NBA star. I'm highly motivated to play basketball, but my height is going to limit me forever. So I'm highly motivated. My capability is always going to be low, right? So when I look at this, there's your motivation. And I know you all are technical enough to understand the area under the curve is small, right? So I've not got a lot of that out of this when I'm looking at motivation. If I'm highly motivated, like I really want to work in the startup, but I don't know anything, you don't need that person on your team just because they're a great cheerleader or they're very excited. Flip side is I have lots of capability, but I have zero motivation. And I've seen this more often than the first one, which is hires someone for the startup and they have great capability, but they are not a self-starter. They need to be told what to do every day, or they need to be reminded that this is not a part-time job, right? That they need to work on. And then again, they're not delivering what you need in the end of the day. So, you know, the star is the person who has capability or can develop it, and motivation or can develop it, because the area under that curve is the one you want, right? That's the standard look at this when you're trying to hire someone for a given job and we understand it. So I replace, in my mind, that left axis. So this is my theory on risk tolerance, right? I replace the left axis with risk tolerance, because that really correlates with how long someone will stick with a startup and try to make it work. What's tolerance for risk? What is your tolerance for ambiguity? I don't know if I'm going to get the money tomorrow. Do I shut it down? Am I terrified? Can I manage to figure that out, right? How long do you run with the risk? If you have people who are highly capable, but they have very low risk tolerance, they're not going to be with you very long. And if you yourself have a low risk tolerance, then you'll need to figure this out, right? Usually you folks aren't in the room unless your tolerance for risk is relatively high already. But recognize that that is what keeps you in the game. So when you're starting to feel hesitant or you can't sleep at night, think about what that means and how can you reduce your risk in yourself or manage your own tolerance to stay here, right? Because you're all capable. All right. So at the beginning, I asked how many of you were involved in a startup, and all I want to do to check in right now is, did I take anybody out of the game? So how many of you still want to be in a startup? Oh, good, you added yourself. Awesome. We added on this one. Okay, good. All right, so now we have everybody on there. This is just my audience. I take data all the time, right? So if you're going to join a startup instead of funding one, but you can flip it the other way because you're going to have to convince people, you have to do your diligence. Has anyone ever been on a due diligence team for an investment at all? Maybe a little bit? Okay. So you have to think about this for yourself, right? So due diligence means, in some cases, thinking really hard about a piece of business, but also being able to comfortably ask questions of people and hold folks to their answers and get answers if you need them, right? So if you were going to invest, which is exactly what joining a startup means, I'm investing all of my future time in this entity. Or if you're going to ask someone else to invest in your idea and they're going to commit all of their future time to this entity, the first thing that I would tell you to look at is those individuals, right? You're going to spend a lot of time together. You better get along really, really well, not just most of the time, like all the time. If you find yourselves arguing with no end, that's not a good start, right? If you find that you're not talking, not a good start. So people are important. The second most important thing is cash flow, because when you run out of cash and you can't pay the bill that's due today, and you can't borrow money instantly to do it, and you can't find somebody who's going to spend their money to help you get there, when you're out of cash, you're out of business. So you might not eat, you might not leave, you might have to move somewhere else. So cash flow is right there behind people. Then there's something I call plan flexibility. So, and I heard a great story at one point from a guy who was looking at investments, right? He loves investing in fundamental technology, which for me is a long-term bet, because it takes a long time for fundamental materials technology to find its way into the marketplace. But he would take those bets if he heard that material had many, many uses, not just one application space, right? So as an example, we made an adhesive at one time that worked really, really well to put the propellant and the liner together for a space shuttle rocket, right? So pretty prestigious, really, really hard technology, but you're going to sell that a little bit and then not at all, and then a little bit and not at all. It was not a great market from that. If that was the only place that adhesive could be used, that would be not a great investment of my time or my money. But that same adhesive could be used in tire manufacturing. Oh, and it might be able to be used in construction industry, and it might be used somewhere else. So as long as there were multiple avenues, different plans that they could execute to get to revenue, that's a great opportunity. The flip side of that is there's a whole bunch of different markets that we don't know anything about, and all of that work would have to be done for every single market, but at multiple channels to market, multiple markets. Then in this due diligence, it's about you. So one of the first things I do when I talk with someone who says, I think I want to do a startup, is we have a really personal conversation about their life. What kind of life are you leading, and what do you want to do in the next 3 years? Right? So if someone says, I'm getting married and I want to have children, okay, you can still have a startup, but you need to scale that inside your head of all of the other things that are going to be happening and what time you can dedicate to it and what you can expect to deliver at the end of that time. As long as you're realistic, it's fine. If you're saying, nope, I've just moved in the area and I can live with my friends and I don't have any real expenses except for about $1,000 a month, and in 2 years I need to make $50,000 a year, okay, that's a different scaling, and that's a different way to look at the business. But we start with that personal need. Some folks have a personal need that they want to be able to sell a business for over $2 million in 2 years. That's a wholly different scale and a different idea. And that may or may not be what you want to do, right? I tend to not go for home runs because I don't see very many home runs, but hitting a single to first base is great. All right, I'm using baseball analogies for people who may not know baseball, but let me just, I recognize that I usually use shoe analogies, right? So when you go to the shoe store and you look at all the things, but sometimes they don't have your size. That's why it doesn't fit, right? That's a shoe analogy. So the personal is important. At the end of the day, though, it's going to be this people part that makes or breaks you. Because with the right people, you can solve just about everything. And with the wrong people, everything go perfectly and it still might not come to market. So get the people part right. All right. We did the check that you're all there, and now I feel like I might have overwhelmed. So I'm going to pause right here and take questions and expound on whatever we've just done. So hit me, what you want.
Sounds like measuring risk might be the most important to do when interviewing when talking to someone about either a startup you want to join or someone that wants to join your startup. Is there any guidance, any way to get started?
Yeah, so these can be hard conversations. And so having done diligence for investment groups, a venture group and an angel group that I'm part of, the best part of that is that I'm coming with cash. And so I feel that I have the right to ask questions that otherwise would seem very offensive to people. Like, exactly how much time do you spend on the business every week? Right? And what you'd find is that, here's a fundamental question that we regularly ask for an investment. Do you have any other jobs besides this one, this startup? Now, a lot of people do because they have to feed themselves. But that then begs the question of, so if you have a full-time job, how much time are you spending on this business? Since you're leading it, and I need to know how much of your time you're spending to lead it, right? So there's a lot of folks that won't invest in a piece of business unless you're completely dedicated to it and you have no other things in the way, right? No other distractions that would allow you to focus on that. But you might have a different view of that, again, depending on what it is that you're bringing to market. So, but you have to know that. And you also have to assess whether the person is telling you the truth when they answer, which is always the case when you're interviewing, right? They might be giving you the answer that you want. By the way, if you're hiring a salesperson, all of this is off, right? Because they're really good at sales, so they're going to tell you what you want. And I have never been able to just interview a salesperson and call that one right? I'm 80% wrong most of the time in the bad way, right? I hire and it's still not good.
Is there an amount that you need to calculate of cash in order to have enough capital to operate without having
Yes, and you can. That's actually something that you can do, and it's a great thing to do. It's that financial acumen piece that we may or may not come to the startup with, right? So if you just think about it as you personally, right? What is your financial requirement for at least 2 years? No startup is going to be done in one. You might get some revenue in year one, but you're not turning it enough that you're going to live on it. So what do you need if it doesn't get there in 2 years for you? Then everyone else on the team that has a revenue requirement for their life living has to put that number in place. That's a number that you must have to do 2 years, right? So if you're going to go to an angel group or a venture group or a friend and family member and say, it's going to take me this long, this is what I need for financial help, and then I'll pay you back, or I'll give you X amount of my company, some percentage, that number has to be there. That's just at the base. Then I've got to make prototypes. I've got to test them. I might need to travel to talk to customers. There's all this other budgeting that you should do above and beyond that. But that base number, you have to have that, because otherwise you're going to be forced to take some other job. And then where's your startup? Nowhere, right? Mm-hmm. Mm. So when you take help from others, it could be in the form of cash, or it could be in the form of intellectual help, like an advisor, or even in the sense that they know people in the market that they can connect you with for sales, right? These advisors, if they're giving you time, that equals money always. So you might need to compensate them too by a percentage of your organization, or you pay them outright. Unless you're a not-for-profit, you usually can't get someone on your board of advisors that's highly skilled without compensating them in some fashion, either for future money because you did well, or current money, but I'm paying you today, right? Advisors can play several of those roles. I regularly play a role of part-time marketing person. So it's a fractional CMO, Chief Marketing Officer, for the startups that are technology oriented, because I speak both languages. I recently worked with a startup 2 years ago. They're doing great right now. But their idea was to place a vibration sensor on manufacturing equipment and have it talk to the cloud, not to the network inside, and just bring the data back, right? And do that for a fraction of what the current systems that could do that today. And what they needed was someone who understood vibration analysis and vibration measurement and marketing. And I said, well, I'm probably the only person on the planet that can say I do those. I know both of those, right? So we got together. I love what they were doing. I understood their market and their business. And in the end, they had no money, right? So it was one of those like, I know you can't pay me. Let's talk about what this will look like. So for 2% of their business, I did work for about 6 months. And I said, if you need to hire me again, then we can talk about what it is. That's dilutive. So when they get more investment money, which they are now, people are actually putting money into that, my 2% will get diluted just like everybody else's. But, you know, I did a little bit of math that said, if they sell for X million and I get this percentage, I feel like I got paid well, that's good. And, you know, there's no perfect answer, right? It's all about, how many of you like to go to Las Vegas or the rivers? None of you. Wow. Okay. So you're not gamblers, right? Because that's the same idea. There's statistics that you could actually do for that. You're right. There's like no way to win the slots, right? But if you're going to play blackjack, or if you play craps, you've got even money most of the time. So you've got some chance of winning if you leave at the right time. That's the same idea that I think about in startups, right? There's a point at which you can invest, and then if you walk away at the right time, you've got the right number. And if you don't, oh, well. Okay, other questions? You had another follow-up question? No? Okay. All right, so now I'm curious, because all of you said, I'm interested in startups. How many of you are actually in one now? I know several of you are, but you're in ones now. How many of you are thinking about starting? All right, so now I want to know a little more. So tell me a little bit about what you're thinking of starting. Mm-hmm. Mm-hmm. So is your background in some kind of writing code or apps or those kinds of things? Okay. So when you say hire somebody who knows about that,
Who knows how to take what I'm writing in Python and PHP and be able to put that together in a way that you can actually deliver to a website.
so that's where you stand at this moment in starting the business?
Well, at the moment, I'm still working on kind of a proof of concept with AI.
Okay. And then maybe when you can show the proof of concept, somebody will show up that says, I really want to do this with you, right?
I'm thinking, so I'm trying to get that first piece done right now. And hopefully in the next couple months.
And are you in school here?
First year MBA student.
Okay. All right. Well, then you're learning all this other stuff behind the scenes, right? That's good for all the business side. Anybody else want to volunteer one? Are you worried? Yeah, good. Yeah.
So I guess I have more looking for a team purpose and the start of the idea at this point. But I'm here because I want to just know more about the process and know what I'm getting into before I try to find it.
Well, that's beautiful. So let's talk about that, right? These are all good choices. So there's always the choice to go to work for somebody else who, as you describe it, will give you a piece of some work that they have, and you will do it. And you will fall into a category depending on what kind of technology business market segment they're in, right? So there's let's see, for chemical engineering, the oil companies, right? So there's R&D oil, and they could compensate you very well, but you will do this small slice. There might be an area that you can do R&D because your education is there. I got that lucky break that I was able to do R&D for 15 years, and somebody paid for all of that. Filed patents, got to publish, nothing went to market. That was kind of not so good, which is why I moved into the other side. I learned a lot, and they paid for everything. My risk in being in that role was low. Not that I understood that when I graduated and took that role. I just knew that I grew up around here. The steel mills were closing back then. I just wanted a good job. Good job meant that there might even be like a pension retirement kind of thing, which you guys don't even think about anymore, but that might have existed, right? So I found a good job. I was paid a good salary. I had vacation days, right? And after 30 years, gave all that up and went to go work for myself. And the reason for that for me at that time was I didn't even realize that when I had graduated before that I could have had this choice, that I could have just done something for myself. That's not how it worked 30 years ago. Certainly not 30 years ago for women either. But what I recognize is that I have choices now that I didn't have when I was in corporate America. And my two rules that I live by is I only work on what I want to work on. You can't give me a project that I don't want to do, because when you're in corporate America, I had lots of those. I had something that was a lateral file drawer that was filled with those projects that went nowhere. The boss would come in and say, let's look at this. And after a few of those, I would say to the boss, that's going to go in that drawer. And if it's not going to go in that drawer, I'll do it. But if it's going to go in that drawer where we don't do anything with it, I'd rather not do it. It's not a good thing in corporate America to say. That's kind of pushy, right? But I do only what I like to work on. And I only do it with people that I like, which is a whole nother choice in corporate America where you have to work with everybody. You don't get to choose. So these two things now, I don't have to filter myself as much. I don't have to be as professional as I was. I know I don't look that bad, but at this point, it's a lot more freeing. I will say, though, that if I had started that way, if I had spent 30 years in the startup environment, I'm pretty sure I could have never gotten into corporate America. I would be unmanageable because I'm already kind of loose as it is now, right? But these are conscious choices that you can make, but they were never something that I knew that I had as a conscious choice. I just realized after I left corporate America that this was so much better. Now, I go on vacations. I travel with people who have regular jobs that are in corporate America, and they take their vacation days. And sometimes I'm taking calls and doing deals on the phone while I'm on vacation. It's my business, right? And they're like, God, you're like always working. And I said, well, here's the thing. When you're on vacation, you still get paid every single day, doing nothing. Sometimes when you work from home for corporate America, We all know that you're on the phone on that meeting and nothing's really happening. But for me, it's my business. So if I'm not working, I'm not making money. So that is the other thing you give up, is that it's hard to let it go to others, because it is your business. And as long as it's small, it's still your business. Right? Oh, that was a great expounding on corporate America. I'm grateful for corporate America. I couldn't have gotten to this point without it, but yeah. All right. I saw you smiling away like you have a story behind that, but I won't call you. All right. Who else wants to talk about where they are right now and get some free advice? Or afterward. Okay, go ahead.
Someone started messaging me recently that I met here who says they have to start what they're working on, and I brought up an element of it that I thought was missing. Now they're trying to invite me to the meeting. So I need to figure out what you're looking for in them to understand whether it makes sense.
Yeah, so if I, and regularly I hear people say, I have an idea. And so I'm going to be counterintuitive on all this stuff that you learn about brainstorming and everything else, right? I tend to be a fairly critical person. I'm not judgmental in the sense that I have any agenda behind it, but I just usually look at things from the standpoint of how can it go wrong? And if you can take away all the things that can go wrong, then there's probably no reason that it won't go right. And I will tell just another aside story from that. So back in the 90s, we were working with a technology inside the corporation where I worked that's called magnetorheological fluid. So it's this controllable fluid. We invented these shocks. These shocks are now suspension systems on cars all around the world, and they're in Porsches and they're in Hondas and all that stuff, right? So we took this all the way into the market, which is how I learned marketing, right? But in that period of time, there were lots of questions about how would we know if we could get this to market? Because if you're going to take something into automotive wants 10 years of durability data. Like, don't even talk to them until you know, right? And 10 years of durability data in the application, which means you have to like get it all the way to the car and then put it on cars, right? Well, we were trying to figure out how to do that part. So how could one decide that they would even be part of this, knowing that you might have a 20-year timeline before you see it in the market? By the way, we got it there in 6, right? Because we skipped some steps and we marketed with loose data, let me just say, right? So part of this is you have to be an engineer strongly enough to understand where your limits are and what you know. And then you have to be a marketing person that can tell a story at the very, very edges of truth, right? Without breaking the truth, right? But otherwise, yeah, right? So, you know, when folks would say, we don't want a new technology in cars, I would say, oh, this is not new. This was actually invented in the 40s, as it was, and patented in the 40s. And we're just working on it now in the 90s because all the computer controls and sensing have caught up to it. And that got me past some stuff. I had the guys at Caterpillar, you know, the guys that make the big yellow stuff, right? Caterpillar guys said, we are not buying anything that hasn't been in the market for a long time. Oh, I'll tell you, we didn't just invent this, right? Although, on the flip side, when you want all these great awards for innovation, you say, yeah, we just invented this, right? No, we didn't invent this, right? The story goes back and forth, just got to be flexible with it. Okay, so in evaluating whether you want to be part of it, the first piece of this is to ask these questions about what would go wrong. At one point in time, we had, this was when the internet was new. Again, you weren't born yet. So the early 90s, we were engineers, so we were using internet. We put everything we knew about this fluid on the internet so that other engineers at other companies could find us and ask us about it. Because otherwise, how do they know this new material even exists? We were getting 100, that's way back then, 100 inquiries a month. So 3 or 4 inquiries a day came in with people saying, I'd like to use it here, or can I get it for this, right? A lot of them came from universities, which case we were very polite, but we didn't handle that very quickly. And some of them came from applications that were really awful, and we knew that they wouldn't work there. So like, don't use this for toothpaste, but that was really an actual idea, right? They wanted to put it in toothpaste. And then there were some good ideas. And we would screen those. And the person that screened them was an admin that I had trained who had no technical background. But she had seen all the answers that we'd given over all this time. And if she couldn't kill the idea, because we'd already seen it before and we already knew that it wouldn't work, it would come to me. And I would try to kill the idea, literally try to kill it, because we had too many. If I couldn't kill it, I gave it to my research scientist who had 100 patents and said, can you invent this? Would this work? And some days he'd say, no, never, physics won't let me, right? Or others he'd say, I don't know. And 2 or 3 weeks later, I might have a prototype on my desk that he'd done, right? There were 3 on average, 3 of those a month. That was still a lot for a little tiny group of 20 people, but we had 3 good ideas a month. But it came from being super critical and eliminating everything and only working on stuff that we were pretty darn sure would happen because we had so many ideas. So when you go look at this idea, you should be looking at it from the standpoint of, I want to talk myself out of this. What are all of the things that are wrong that I can address? Say, okay, well, you don't have this, or this is going to take this, or I don't think you're thinking about this area. And listen to the answers. And if they get annoyed by your questions, then you already have an answer. Right? You have to be able to face the truth, right, on all of this. But if they're not, if that's part of it, is that they like that there are somebody questioning these things, and you come back with that, and you can't find a reason why it won't. At the end of the day, that graphic that we had was, here's the idea, and I made money, and I did all this other magic, and I got it out. If you can't figure out why that won't happen in the time frame that you have available, plus times 2, like do your safety factor, then, right? I have a whole lot of people working with me in startups that it wasn't their idea. I have a book of ideas. They're always sitting over here. I have an idea, I put it in my book. Every now and then I kill an idea and I take it out of the book, or I put some more information down before it. And when someone says, I want to work on a startup, I'm like, let's go through the book. You like any of these? Take one of these, right? So, because they're kind of screened, at least that there's probably money behind it. But, you know, and we have 3 of those that are running now that came from the book. Good? All right. Who else needs help? I'm looking over here. No, not ready. All right. Or you can come to me afterward, because I know it's sometimes hard to just talk in front of everybody. All right. Do they have my contact information? Good. If you have questions, you know, you can find me on the internet. All right. Thanks so much. I'm going to push this button.